United Spirits, Radico Khaitan and Allied blenders trade sharply lower as Maharashtra government excise duty on Indian-made foreign liquor has been increased. Analysts expect an EPS hit of anywhere between 2 to 8% on these companies.
JM Breweries gains with benefits expected from the newly introduced Maharashtra-made liquor category. United Breweries and Sula, they gain as the duty on beer and wines remains unchanged.
Shares of Talbros are higher by almost 3% after receiving up to 580 crore rupees worth orders coming in from leading equipment manufacturers.
Bansal Wire sees an uptick after DAM Capital initiates a buy rating with the target price, which is much higher. They are expecting a revenue CAGR of close to around 30% till FY27.
Aditya Birla Capital rises after nearly 2.5 crore shares worth about 600 crore rupees change hands. Marksans Pharma also gains after a block deal worth 257 crore rupees.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and the markets are trading in the green. The Nifty is up close to around 40 points, but you'll have to say that it appears that we're still in a bit of a range. The Nifty Bank is underperforming yet again. Broader markets, a lot of action going on, Mangalam.
A lot of action going on, Nigel. You know, you have nearly 2 stocks which are advancing for every stock which is declining right now, and a bunch of stocks which are doing a lot better this afternoon, or rather this morning. We do have the insurance stocks. So, pull up HDFC Life. That's moved to the high point of trade. Following suit is SBI Life as well. So both these insurance companies come up for you on the screen, and they're seeing some traction. LIC Housing Finance is the other one. So it's NBFCs, financial related names, and the lower rung, companies which stand to benefit from the interest rate cut that was announced on Friday, even as the market continues to, consolidate at higher levels. We have Samman Capital, which too has seen a spike of nearly 6% odd. But amidst all of this, there has been a listing today. This as the demerger of Quest Corp has finally taken effect. Bluspring Enterprises is now listed as a separate entity. Remember, this is the company that holds their integrated facilities management business, their security business, the food business, and found it as well. Kamal Pal Huda, who is the executive director and CEO of the company, now joins in to discuss the outlook for the business. Let's get the basic numbers out, Kamal. For the period that you have reported so far, the revenues have been close to around 2,500 crores with 4% EBITDA margins. Going forward, what is the steady state revenue growth that you anticipate in the business? And if you could give us a sense on margin expansion as well, and break it down for all the verticals that you operate in right now.
Sure. Thank you, Maglam and Nigel, and good morning to your viewers. We're just coming out of a fresh listing half an hour back. And to your question on revenue trajectory, those numbers are 9 months numbers. And from a future perspective, see the vision, we're creating this company out of a very rich legacy of strong operational excellence, a people mindset company, and, company which is poised to grow on the massive infrastructure investment and unprecedented infrastructure creation that's happening in the country right now. With that and with, let's say, 6 powerful brands that we have, we believe that the vision for 2030 for us would be to take the margins from the present 4% to almost 6%. We want to grow at least at 3x of the GDP growth rate, and the reason we are very bullish about this growth rate is we're not a fresh company. It's just that we've got into a fresh identity right now, but we've had years of deep domain operational knowledge. And we work with 6 powerful and trusted brands. And I can probably take a minute to explain each one of them. So Avon is a brand that, runs integrated facility management across country. Food brand, in integrated facility management, we do around 360 million square feet spaces. And, highly compliance-led services and tech-enabled services. We run a food business where we do almost 180,000 meals per day. Across the country. We have a security brand which has been there for 25 plus years with almost 21,000 security guards and digital security services.
Hi, got it. All right. Hi, Mr. Kamal. Good morning. Good to see you in. Congratulations on the listing. This is Nigel on this side. So should we assume that on a steady state basis, you'll be looking at growing between 20 to around 25%? Would that be a fair estimate? And also market share, I'm going by the rough numbers that you'll put out. I think 1,70,000 crore is the, is the total TAM for you all. and out of that, I think you'll have close to around 2%. So, where do you see this market share number move to on a blended basis?
Sure. So Nigel, yeah, you're right. Across the service lines that we do, we believe the total TAM is around 1,70,000 crores in the organized space, growing at a CAGR of 13%. And, we want to obviously grow faster than the market. And hence, in the near term, we want to grow 18 to 20%. That's the target that we have set for ourselves. And you're right, despite being, let's say, one amongst the leading in the national space, we are right now only 2% of the market share. So obviously, if we want to grow 18 to 20% when the market is growing at 13%, mathematically, we want to obviously enhance our market share from the present 2%.
All right, we take that point. To what would that target be? Do you have an aspiration here?
See, we want to, be, like I said, a 6% EBITDA margin company, grow 20%, and outbeat competition and market in that. Now, this should take us from the present 2% market share to at least 3% market share over the course of next few years.
All right, 3% over the next course of few years. But, on the margin front itself, overall margins go from 4% to 6%. On the one hand, one should look at it, one may look at it as just a 2 percentage point increase, but it's actually a 50% increase on the 4%. But what I wanted to understand is what is it that will drive these margins? Because IFM, anyway, a low margin business, what are the categories out of the 6 that you just enlisted which will actually see the maximum operating leverage?
Yeah, sure. So see, you are right. Some of the business lines that we have are operating at, sub-market margins. And, I think one thing which will play out well for us is the mix of the businesses that we have. We've got businesses which are into food, telecom, and industrials, which definitely are, doing better margins than the present 4%. So food, we do around 8% margin. Telecom, actually, we do double-digit margin. And industrials right now is also in excess of 6% margin. So we are wanting to expand our high-margin businesses, stabilize our FM and security businesses, which are obviously a bit below the market margins. And a lot of actions on, digitally enabling some of our services, bringing down our cost to serve in some of these businesses. And I think demerger is that way has been very helpful to allow us so much of management bandwidth to focus on these businesses. And, a lot of cross-sell opportunities, the breadth of services and the scale at which we operate.
So if you could simplify that for us, Kamal, if you could tell us what the revenue mix of the company would look like. Right now, nearly half of it comes from IFM. The others are almost evenly distributed. If you could give us a sense of how the revenue mix of the company would look like when you reach 2030.
Yeah, so you're right. Presently, 50% comes from FM, 20% comes from security, and the balance 30% is kind of distributed between the other 3 businesses. We are very bullish to grow food and industrial business in excess of 20 to 25%, while the others grow to, let's say, 15, 16%, which means that the blend of, 70% with FM and food and 30% else, we want to take this to 60% between FM and security and 40%. So 10% market or let's say 10% mix we want to improve from a high margin businesses.
Okay, all right. Very quickly, Kamal, before we let you go, your 2030 vision going mathematically should be that your revenues get to more than $1 billion. Would that be fair? With margins to the tune of close to 6% would mean that your EBITDA number will be in the vicinity of around 500 to around 550 crores. Would that be a 2030 aspiration?
Yeah, that's the aspiration, Nigel. We want to, grow 18 to 20%, and that takes us very near to $1 billion. And you're right, at 6% with the operating businesses, we want to be near to that 500 crores mark on an EBITDA basis by 2030.
All right. And this Foundit, how much would that contribute in terms of revenues? It's still very small in your scheme of things, but how much should that move to?
Yeah, so Foundit obviously is a platform investment that we've done, Nigel, and right now you are right. They have a smaller market share, and but it's a future enabled tech platform, and we are hoping that by Q3 of this year, Foundit should be a break-even business for us. And in platform-based businesses, the investments are done, so additional revenue then directly contributes to the margin. Foundit should grow from a break-even this year to a minimum 8 to 10% margin business next year. But it's also a strategic investment. And, as the valuation and the growth of business grows, we may want to be also an investor which through which we unlock value in founded over a period of time.
That makes sense. We'll discuss that at a later date, when you're at liberty to speak a little more about Founded as well from its current size. But just a final question from my end. You've always been acquisitive in nature. Once when you were part of Thomas Cook, thereafter Quest Corp, that got demerged, and now Quest Corp itself has been demerged. With you having this sort of management bandwidth, are any acquisitions on the anvil in the very near future? Or you will let the business settle first and then maybe look at any acquisitions in FY 27-28?
So, the whole premise of demerger was that we wanted to carve out large operating businesses and let them focus on their organic businesses. Bluspring is going to be the next investment vehicle for us in future. So, we also want to, in next 5 years, position Bluspring as a next Quest. So, we would want to take strategic bets in Bluspring when it comes to the capital allocation policies.
All right, take that point. Thank you so much, Kamal, for joining in and giving us an outlook on that business. The stock mildly lower in today's trading session, but remember, this is the first day of trade. The stock is in T2T as well. So as business chugs along, let's see where this goes on. That's Bluspring, a demerged entity from the erstwhile Quest Corp. Take a short break, come back, get you more on the markets and stock-specific action. Stay with us. We were speaking about some of the financials doing well. Just keep an eye out on, Poonawalla FinCorp. That's the one which has moved higher, was in the red for most part of today's trading session, has now moved into the green. We have Bandhan Bank as well, which has moved to the high point of trade. And we are seeing some traction in some of the gold financiers as well. Both Manappuram and Muthoot are higher. LIC Housing Finance is the other one, which too has moved to the high point of trade. Good time to get in Shilpa Raut of Prabhudas Leeladhar for a quick technical check on the market. Shilpa, overall, the market has been consolidated with a slightly upward bias. Right now, as well as we speak, the Nifty is up around 66 points after being largely flattish. Where do you see, the indices move from here on, and what would be tradable levels?
Good morning, Nigel and Manglam, and thank you for having me on the show. Talking about the indices levels, we see that the FIs have been consolidating in the net longs at around 20%. And Nifty has been forming good support at around 25,000 put. If you see, that's where the maximum consolidation is happening. So for time being, 25,000 is supposed to act as a good support. And on the upside, once we move surpass 25,250, we will see the higher levels of 25,500 to 25,600 loans.
Okay, all right. What about individual stocks?
Yeah, Nigel, I have two buys. The first one would be a buy in LIC Housing Finance. Financials are taking a good, thrust today, and we see LIC Housing Finance forming a good support above 620. So the the stop loss lies at 617, and the targets would be 635 to 642 on immediate basis. The other one would be a buy in Aarti Industries. Aarti Industries is also looking good. It is all set to test levels of 505 to 520 levels. Keep a stop loss of 480.
All right, we'll do that. Thank you so much for joining in, Shilpa. Meanwhile, a couple of these logistics stocks are spiking right now. So pull up Snowman Logistics, up nearly 8%. Remember, management of Gateway Distriparks had said that they are always looking to increase their stake in Snowman Logistics. Will they continue to do so or not is the big question here. The stock up around 8% with decent volumes backing it as well. Take a short break, come back, speak about more stocks and the market at large, where we are seeing some traction build up now.
Welcome back. Well, keep an eye on a few stocks that should come up for you on the screen. You should pull up BSE because the option volumes actually have fallen in the last 5 days. For BSE, they continue to gain market share, and that's been perking up a little bit. In fact, for the month of June, the market share has improved even from the month of May. However, the volumes on the whole dropping is a negative for stock exchanges. And that's why, in fact, that stock, after seeing a big run in the last few months, that's moved to the low point of the day. So that should come up for you. Next up is VIP. You have some negative news flow because there's a credit rating company that's come with a rating downgrade on the company. But it seems the street is expecting something from the counter because the numbers were awful that came in close to around a month or so ago. And now, in fact, maybe the normal speculation that there could be, a new buyer. That's pure speculation that we've been hearing for the last couple of years. But for the time being, the stock is up 8.5% on a day that they get a rating downgrade. And the other one is from the Welspun Group. If you look at Welspun Specialty Steel, that's been a relative underperformer. The smaller part of the business, they're in a similar business like Venus Pipes as well as in Ratnamani steel tubes. That one, in fact, yesterday it was up, and today as well it's up close to around 3.5% or thereabouts, though it's corrected from around 55 rupees odd. Mangalam.
Those are a bunch of stocks which we are looking at. Don't lose sight of the big boy Reliance as well as we speak of all the other stocks. It's in fact currently the topmost contributor on the way up for the Nifty. The Nifty closing in on that 25,200 mark. 25,175 is where we are at right now. Reliance is the one which has spiked. With that, we'll step into a short break. As we wrap up at this show, we're announcing the launch of Money Control Super Pro, which gives you live trades by SEBI-registered RAs, ready-made chart patterns, and they form AI-generated stock alerts as well. You can get your investment superpower today. Subscribe now to Money Control Super Pro. Wrap up on this edition of Chartbusters. Trading Hour comes up next.